What is going on? Welcome back to Trending Stocks. Today I want to talk to you about DraftKings. Ticker is DKNG. They just came out with their earnings, amazing earnings, but I want to talk on what the data behind the scenes is all saying and potentially where it might be going from here. Before I get into any of that, make sure you guys hit that thumbs up and subscribe. I always greatly appreciate that. And without further ado, let's get right to it. So as you can see based on this, it does look like they had roughly about 800 million in quarterly revenue. And they did also increase their 2023 guidance. And of course, as a result, it does look like some analysts did jump on board. So based on the 17th, there was roughly about 5, give or take, Guggenheim, if I'm saying that right, Deutsche Bank, Benchmark, BTIG Research. Then it looks like a duplication of BTIG. But it goes to show that $26, $15, $23, and $24 was given. And so the fact that it's at $20.50 is pretty good if you want to consider it that way. And based on, for instance, Deutsche Bank, they previously had a $14 target, so they did up that. And Benchmark, they did have a 19, so they upped that quite a lot to 23. Generally speaking, I still do feel a lot of these ratings are still fairly conservative. They're being very cautious, especially with higher interest rates and things like that. But I think this home run earnings was very, very good. Actually, second back-to-back earnings was very good. And while I'm still on Interactive Brokers, I do have a link to them in the description below as well if you do like a lot of this information. But as you can see, the latest Morningstar report for DraftKings to incorporate their earnings does put the fair value for DraftKings at $26.21. So once again, you guys take that information how you see fit. I am not a financial advisor. Do your own due diligence at the end of the day. When it comes to it though, I want to give you a quick update on shorts. Not necessarily because there might be a squeeze, but because I like to use this as a fairly good benchmark. So right now, the short score is currently 47. Utilization is 16.33. And as far as what shorts did, for instance, on Friday, they returned 215,000 shares, and 7.38 is the percentage of the free float that is being shorted. Cost to borrow, for the most part, is complete just pennies. It's nothing. So in the end, DraftKings most likely will not have a squeeze on any accord, even if they do have more back-to-back home run earnings. But it's just, I like to use this as a good benchmark, like I said. So I think generally speaking, the fact that they were returning is fairly optimistic. And as far as what was happening on Friday, so you can see right here, there was a lot of call options being purchased. Roughly about, it looks like $39 million worth of premiums just for call options, just today alone. So I think in general, there is a lot more upside anticipated for DraftKings. And as far as what's been happening on, for instance, the dark pool, which of course dark pool sometimes people don't like because it doesn't necessarily say who's buying, or potentially the bid and the ask is just more so for institutions. But there is a lot of big money that's been happening. So $6.11 million in one transaction, 1.64, 1.66. So I think behind the scenes, a lot of big money was buying in. So roughly about, looks like 300 transactions just today alone, just for DraftKings. So once again, that could be perceived as a very good thing. And then what I'll quickly do, I'll just give you a quick summary of this. So these are all the transactions on the secondary market. Secondary market is basically just what retail investors do trade amongst each other on. So typically $1.56 million on that exchange is pretty abnormal, and it does stand out. So 1.56 million, 1.46 million, looks like $16 million, but this did happen after hours, but still $16 million definitely is something to watch for, that maybe another big institution did get in, aka maybe BlackRock, Vanguard, things like that. And also pre-market, there was also $13 million. And when it comes down to institutions, this is the latest round of 13F. So majority of them, you can see all red, closed out their positions, because when these were submitted, it was during Q4. That was the transactions that is incorporated in these 13Fs. And clearly, Q4, there was a lot of fear. There was a lot of fear about inflation, higher interest rates, and many other things. So DraftKings clearly was a junk stock to them for a lot of institutions to reduce their position. But the smart ones increased, such as you can see, ARK and Vanguard. So 12% for Vanguard and 19% for ARK. So like I said, I think a lot of these institutions that probably did sell out during the Q4, within the Q4, were definitely going back in and buying today. So once again, let me know your thoughts on all of that in the comments below. So as far as where it can go from here, so I've touched on all the data points and things like that, but everyone wants to know, where is it going from here? So looking on the actual technicals, I do have the Bollinger Band, 50 and 100-day moving average. So what did happen today? It completely burst out, and of course very much justified, but based on the technicals, most likely it will cause a little bit more of a consolidation, because whenever there are massive spikes out on any different occasion, it usually does get dragged back down and unfortunately does consolidate. So I know the earnings were absolutely amazing, justified a huge rally, but the technicals most likely will cause it to get pulled back down into around the 1950 range. So that's just my own interpretation of that, but I think in general, once it does consolidate, finds a new big support level, it should be able to trend up significantly from there. So that's just what I see, at least in the short term. Let me know your thoughts on all of that in the comments below. If you haven't already, hit that thumbs up and subscribe. I always greatly appreciate that. One final thing I just want to share with you. So there is a new broker, Momo, and they have a massive promo only up until February the 28th. Just click on the link in the description below or also the comments. Just sign up, you get 1 free stock. Very, very simple stuff. If you want to throw $100 down as well, you can get 4 free stocks. Each stock is valued up to $2,000. So definitely take advantage. It's kind of a no-brainer, but let me know your thoughts on all of this in the comments below. Give yourself a shout out as well if you were buying DraftKings or what your average is. Give yourself a shout out in the comments below. And with all that said though, I appreciate you guys watching. Let's all make a lot of money on DraftKings.